Today I'll be showing you an extremely easy option strategy that you can set up where your max risk is just a couple of dollars. And so for this example, I'll be showing you on Ford Motor. So we'll come over here. So first off, let's look at Ford Motor and let's look at how it's been doing the past week and month. Had a little bit of a fall off right here and it started to rise up again. So let's see, it started off around 12, dropped to around 12.80. Now it's at up about 50 cents. The past month dropped a little bit. It's on the rise again. So it's moving pretty flat. So this is a great stock that we could do for this example. I would not copy this exact trade, but this is a pretty realistic stock that we could do it on. So you could copy this one if you'd like to. So let's come over here to trade Ford options. So this is going to be a butterfly. So first off, what we're going to do is we're going to sell a call where we think. Well, first off, let's do our expiration date. Robinhood will always set it up to where the closest expiration date will be chosen by default. Filming this on August 29th, so this is like 5 days away from now. So we'll set it to September 3rd. So we're going to sell a call where we think where we think Ford will be on this expiration date right here at September 3rd. So let's go back here to this week. Let's say I've seen it rise up a little bit, and let's say I think that that's a little bit too much of a rise, and I think it's going to start to fall off again. Some stocks will have rises that are just a little over. For example, like right here, it rose up a little bit and dropped down again. Right here, rose up a little bit, dropped down again. Right here, rose up a little bit, dropped down again. So let's say I think that that's going to happen right again. I think that this little rise and drop right here is going to happen just the same. It's going to rise up a little bit and drop a little bit. So let's say I'm going to sell a call. I think it'll be around the $13 price on September 3rd. So we're going to sell a call right here, and then we're also going to sell a put in the exact same spot. So you should see something like this. And now you can see our max loss is unlimited. So if Ford tanks for whatever reason, our max loss just keeps going down. If Ford rises a lot for whatever reason, our max loss just keeps going down. So now we're going to limit that. So we're going to buy a put, and for this example, I'll show you first. Let's go one below the place that we sold our calls and puts at. So we're going to buy a put one below. Now you can see we fixed this side. So now we're going to fix the right side and make that loss limited. So now we're going to buy a call, and let's go one above, just the same as we did with the put. We went one below, so when we buy a call, let's go one above. So now we have this. Now we limited our loss on both sides. But let's also come over here to NASDAQ. Let's type in the ticker symbol that we chose for our stock. You're going to want to type in whatever you chose. Don't type in Ford unless you use Ford. And then we're going to come over here, click on dividend history. So now we're going to check our dividends because we're selling. If you remember, we sold a call and a put right here at the $13 price. So since we sell stuff, there is risk of assignment when you get close to the dividend date. So we're going to make sure that there's no dividend date that we have to avoid. You can see right here the last dividend was January of 2020. The ex-dividend date is not available. So there are no more dividends right now for Ford, so we are safe in that aspect of assignment. Always make sure that you look up the dividend date when you're selling calls or puts in an option strategy. So this one right here is pretty good. It's just a very simple trade to set up, a butterfly. It's pretty easy. You can set it up with a lot of different stocks. I tried out with several different stocks and see how the prices line up. Right here we can see our max loss is $16. Our max profit is $34 if Ford is sitting exactly at $13, which is pretty unlikely. You can see it just has to be between 1266 and what is this? 1334. For a stock that doesn't move that much, that is pretty realistic. We'll take our chances on that considering our max loss is only $16. But you can see that the current price of Ford right now is a little bit towards the top end of this butterfly. So if it rises a little bit, we're in the red. So maybe we want to make it to where our triangle right here is on the right side of where Ford is trading currently. So if it goes up, that's when we have some wiggle room. So let's sell a call at the 1350 instead of the 13. So we'll sell a put, same spot, 1350. Buy a put, one below. Buy a call, one above. So now you can see how that lines up. So max loss is now $18, max profit $32. But now you can see the green part of the triangle is on the right side of the current Ford price. So now when Ford rises a little bit, we'll be in the green. But now if Ford drops a little bit, now it's closer to the red. So you can see which side to put it on if you think Ford will rise a little bit or sink a little bit. But we can't make it to where the triangle's right in the middle just because of the way the prices are lined up right now. But we'll come over here to option strat to visualize this a little bit better. So like I said, this is a long call butterfly. Never mind, not a long call butterfly, it's an iron butterfly. So we're going to come over here and then type in the ticker symbol you chose. We chose Ford, so we'll just enter that in. First things first, set the expiration date. We chose September 3rd, so make sure that that's blue right there. All we're going to do is just copy this exact layout into option strat, and it'll show us exactly what's going to happen. So we'll go from top to bottom. So $13.50 call that we sold. Sells are on the bottom and buying is on the top. So $13.50 call that we sold right there. That lined up perfectly actually for us. I think, yeah, because then a $13.50 put that we sold. C is for call, P is for put. So the sell portion is right. Now let's fix the buying portion. So we bought a $13 put. Red P is put, 13. And then we bought a $14 call. C for call. And there we go. So now you can see, we can expand this a little bit to see exactly what has to happen for our profits, and you can see the day-by-day results right here. So yeah, you can see exactly where the price will have to be on what day for your profits to be. Obviously this is only $28 in like a couple days. So if we come over here, we hit continue. Now we can switch this to like, let's say 5. So now our max loss is $90 and our max profit is $160. Because we did 5 contracts. We could switch that to 10 if you really wanted to, but you'd lose 180 to gain 320. And so you can see just the profits right in there. I'd probably only do about 5 if you were to do this one. Yeah, I do about 5, so you make about 160 is your max profit in a couple days, which is pretty good. This is option strategy though, so I would research all the risks behind this, like we did check out the dividend dates. We're good on that aspect of it. But if you are willing to put this into place, it's a pretty easy one to do, and the profits are pretty likely. The chance of profit, well, you'd have to pay for the premium version of this to see, but let's see. Yeah, you can see your break evens too. It's some pretty good wiggle room. It's about 60-70 cents for a stock that doesn't move that much, and it's only a couple days away, so it's pretty likely that it'll be in that point. Like I said, if you believe in this trade, you should definitely do more contracts to get a bigger profit, but you will get a bigger loss if you're in the red. But check out my channel for other option strategies. I have lots of videos on there. If you have any questions, be sure to comment those down below, and I'll be sure to answer those all. And yeah, thank you for watching.